So my wife, I get a phone call, and my wife's on the phone, and she's like, "Who sent you this?" I'm like, "What are you talking about?" She said, "You got a package," and I didn't realize it was for you because I get all the packages in the house. So I opened it, and I said, "Oh, that's from AJ. I'm not supposed to open that." She goes, "Okay, I won't tell you what it is." And then she just started laughing her butt off.
Welcome to Drunk Real Estate. Grab a drink and enjoy the show.
Hey there, welcome to episode 73 of Drunk Real Estate. I am Kyle Wilson, Ashley Wilson's husband. I'm going to do this every time, guys, where I just tell a joke right before I start, so you're all laughing, and it makes it a good starting to this podcast. But hey, should I intro you first, or should we open AJ's gift that he sent us?
Let's open the gift. Do the gift.
If you're going to do the gift, I got to explain it.
Okay.
So, all right. So
it better be a good vintage, AJ.
Yeah, there's a lot of like lead up to this. Like, we have these gifts. They were sent to our house. We weren't allowed to open them. They were in just straight Amazon packages. So it was like hard not to, because I get Amazon every day. But anyway, go ahead.
All right. So I got this too. It's funny enough, I actually forgot mine. But I got this too. So this was from a listener of our podcast, and they thought this would be funny because of some of our discussions throughout this podcast in the past. So I already have mine. Yep. So pull them out, guys. And I want you to open them up. And for everybody
like a kid
that's
on Christmas,
listening,
I'm shaking it.
Right.
Like, what is this?
For everybody that's listening, I'll tell you what it is.
You have a different container than we do, Kyle.
Are we going to describe this for our listeners who are not watching the YouTube?
Yes, I will. And this has to do with some criticism from all of us, I was told, on the podcast. And I thought this was pretty hilarious. So go ahead, open it. And
first of all, how fat do you think I really am? This thing is like a double.
Daddy's home, baby. Daddy's home. So people who can't see us, he sent us a T-shirt, a custom-made T-shirt, and it's a picture of Donald Trump standing out in front of the White House with the caption, "Daddy's home."
Thank you for proving my my hypothesis that you guys have daddy issues.
Apparently, a lot of people think we all have daddy issues. So
fair enough.
First of all, I mean, seriously, this is like for like, I don't know, like, yeah, it's like triple X. It's like triple XL.
I only got a single XL.
Like so the shoulders are twice as long as my shoulders.
Mine's perfect. Thanks, Muddy.
There's definitely going to be some fantasy football bets around. Loser has to wear this shirt out front.
Oh, that's a good one. That's a good one.
It's too also though where you have to wear it, not just wear it, but like
on stage.
Yeah, on stage or for a podcast for sure. AJ, because that was a good gift, so I'll let you go first. How's it going, man? Anything going on with you?
Going good, man. Just it's fall, running at it. Got my Diet Coke here, ready to go.
Nice. Oh, that's a real glass too.
It's a real glass.
Plastic shit.
Yeah. Yep.
Awesome. Jay, I see you getting prepped, so I know you're ready. So let's have it.
I'm pouring the wine. I'm going with the same thing I always go with. Circumference cab. I'm still working through the Costco case. I only drink it on Tuesdays.
Yeah, this is our whole idea that we were going to have a drinking podcast, and we were going to switch things up and give ideas for people to drink in different situations. You're really wrecking that. Hopefully, Mauricio is going to bail you out.
Hopefully, some alcohol manufacturer calls us up one day and offers us a sponsorship, and I'll drink whatever they pay us for.
Mauricio, what do you got, buddy?
I got a 2019 Zinfandel. I usually don't drink Zins, but it's a Lorenzi, one of my favorite Southern California producers out of Temecula, and it's one of their estates, and it's delicious. And Zinfandel Estates, I'm a real big fan, by the way. Shout out to Lorenzi Estates. Really solid wines. So if Lorenzi wants to sponsor the show, dude, give me a call.
Hope they're not too solid. I am going with the new one. I'm going with the rye. I'm usually a bourbon guy. I like it a little bit sweeter. When I'm going with the rye, it was a gift, so I figured I'd give it a try on the podcast. I haven't given it a go. It's called First Call. It's from Kentucky though, so Kentucky rye. So I figure it's got to be pretty close. So we'll see how it goes. Give it a go. Got a picture of a horse and everything, so must be legit. 60% of the time it works every time. Are we just going to get into this?
Let's do it.
We still have a couple months until President Trump takes into office, but it doesn't mean the effects of the election haven't taken a hold of the economy. We mentioned before that the Treasury rates have spiked, the stock market hit all-time highs, and those crypto bros, they're thinking we're going to the moon again. So I think, Jay, it's probably time for you to just give us a little bit of an update on the economy again.
Yeah. So, well, let's start at the beginning because it's been a few weeks since we've done this, and there's been a good bit of stuff that's happened, obviously. But first thing, I don't think we ever talked about this, but about 2 weeks ago, we got a jobs report for October, which
my
was
favorite.
Yep, your favorite. Well, this one, I don't think anybody would argue was manipulated because these numbers were pretty bad. So expected 100,000 jobs created in October. We actually saw 12,000 jobs created in October, which was exceptionally low. I mean, it was low compared to what's been created the rest of the year. It was low compared to what was expected. There's some reason to believe that there's explanations. Apparently, there's a Boeing strike going on, which may have accounted for about 44,000 jobs that look like they were lost. And then there was the hurricanes, Milton and Helene.
Only one of those hurricanes are factored into the last jobs report. You're already sounding like an apologist here, Jay.
Is that true?
That is true. The second one hadn't happened when the jobs report had ended. So
I'm looking at an article here through CNBC. So CNBC is giving me some. CNBC specifically says in this article, along with that, the report noted the impact of Hurricanes Helene and Milton.
Lazy reporting. It's the media also thought that Harris was going to win.
I'm gonna go look at the report myself and see if that's the case.
Thank you. Always go to the source, my friend. Always go to the source.
Okay, so I will do that. But at least one of those hurricanes, it sounds like we're in agreement, may have caused some issues. They also said that basically this was the lowest they've seen in survey responses. So we've talked about this before, that with jobs reports, they rely on survey responses from businesses and people. Apparently, this is the lowest response they've gotten from businesses, not just in the hurricane areas, but across the country, than in 30 years. So they didn't have a lot of information to go on here for some reason. I don't know why that is. But anyway, I think there's enough stuff that's happened since the job report that it kind of negates that, but it's still an interesting data point. And do we want to talk about it?
Yeah, of course, Jay. I'm not going through a jobs report without talking about this.
Can I ask a question here? Can I ask a question? Because I want to make sure, because I've been a little bit out of the loop. Did you say 12,000 jobs were created? Is that the number? Did I mishear that? Is that 12,000, not 120,000? That's not 12,000 in Pennsylvania. This is total?
So again, the estimate was 100,000, which is still relatively low. 44,000 were likely the result of the Boeing strike, and then the hurricane probably accounted for a bunch. But 12,000 is still a low number. It's a pretty horrendous number. I'm surprised it didn't make bigger headlines. I was traveling at the time, so I didn't have a chance to write much about it or look into it. But it basically didn't hit the stock market, so investors didn't seem to be disturbed by this. So I don't know what to make of it.
When was the last time we were below 15,000 jobs?
I
always feel like even at 100,000, that's super low.
I know the answer to that. It was 2019. It was I forget what month, but it was 2019. That was the last time it was below that. And not only that, like, we're 12,000 jobs. We do know that's getting revised lower, right? We're going negative. Like, if you unless you think a trend is that 12 of the last 15 have been reviewed negative, not to mention the last two. Once again, little footnote at the bottom of every single one of these jobs reports, the last two have already been revised down 112,000 or something between the last two. So don't look behind that curtain. But then all of a sudden we have basically the media, as Jay says, they try to just make it sound like it's fine. Nothing to see here. The Boeing strike, we had the hurricane, Boeing strike, everything going on. It's not a big deal. But it's only 33,000 jobs was for the Boeing strike, and they haven't put a number on the hurricane strike. But as they said, they projected for 100,000. So like this is a big deal. No one's talking about it. Not only that, okay, I'm going to keep going here, guys. I love doing this. So of those 12,000 jobs, 51,000 of them, of the 12,000, so 51,000, figure that math out, were healthcare, and 40,000 of them were government.
25% this year of all of the job growth numbers were government. And that is true. It spiked up over 20% last year of all job growth were straight from the government.
And this is where Jay's really concerned because, Elon Musk is going to show up and he's going to be, he's accountable for cleaning this stuff up and basically getting rid of all this unwanted government jobs. What's going to happen to unemployment when he comes in and starts cutting jobs? You're going to go from plus 12 to
We'll know
negative
what the
200.
real actual employment number is. It's not going to be totally fake and artificial where we think something's happening where it's actually not. I mean, you take out job growth. If we're looking at the economy and how the economy is really growing, I mean, the spike in the government percentage of the job growth numbers is wild over the last 4 years. It's just eclipsed to be a fourth of it. Well, all of a sudden, that really makes you have a bad impression of what's actually happening in the economy. So for normal people getting the jobs where they're going, there's all this job growth and everything, 1/4 of that is not from the marketplace.
But more importantly, it's going to start, again, if what has been promised happens, and that's a big if, you're going to start seeing negative government jobs, right? And so now you're looking at, forget plus 40,000, forget even, you're going to lose 40,000 plus. You're going to start losing jobs. And so the question is, what's the impact? What's the economic impact on that scenario?
So I just threw up a graph and just let me know if this seems bad for jobs. Like it's just literally a trend line down and to the right. So like, and yet, as Jay said, stock market stayed up. The 10-year Treasury dipped like 10 bips for like a half a second and then went right back up. And so it's like how many times I keep referring back to the Heisenberg quote where it's like, he can't keep getting away with this. Like, how do they keep like just putting this under the rug and acting like everything's okay with these jobs?
Jay, I think that was geared towards you.
Yeah. So I'm sitting here trying to find out the average number of jobs created per month over time, because I'm looking at your graph that you just put up, Kyle. And so one thing to note is, it's down and to the right, but that doesn't necessarily mean that the most recent jobs reports, it might, but it doesn't necessarily mean the most recent jobs reports over the last year are horrendously bad. Part of it could be that the beginning of your chart was 2021 when we were recovering from COVID, and those numbers were extremely high. I mean, we added millions, even over 10 million jobs just in that year after COVID. And so it's possible that that a normal chart would look a lot more like the right-hand side of the graph that you just put back up than the left-hand side of that graph. And I'm just trying to find the data in real time while we're talking about this.
Well, I just pulled up some data from Federal Reserve Bank of St. Louis. Said over the past decade, because you just say over time. So over the past decade, from 2014 to 2023, the government employment in the United States has experienced modest growth, with an increase of approximately 1.5 million jobs over that 10-year span, which is an average of 150,000 government jobs, according to the Federal Reserve Bank of St. Louis. So.
Okay, so 100. So if it's 1.5 million a year, that's about 130,000 per month, which means that the right-hand side of the graph that Kyle brought up is more indicative of average monthly. Obviously, not the last month, which was 12,000. 2 months ago was 78,000. But other than that, that's more indicative of what we've seen on average for the last decade than the left-hand side of that chart. So it's very possible that what we're seeing is just a normalization of the job market, not necessarily a trailing off.
Yeah, but you have to keep in mind, too, that we need like 130,000 a month just to keep up with population growth. Like that's just baseline. So if we're less than that, like we're losing.
Yeah, but these are government jobs. I'm not saying real. I'm talking about government jobs, 1.5 million government jobs.
That's what I was specifying to Jay, too. Like you have to keep it in perspective.
That means our federal government, I assume this is federal, but maybe it's also state and local, whatever. But literally, we've added 1.5 million government jobs.
Which
So
is
if
not
you go-
unusual for an election year, though. They
This is over the last 10 years. No, this is from 2014 to 2023. This is the last decade.
Anyway, Jay, you can move on. I don't want to spend all day on jobs report.
I appreciate that.
Everybody breezed over this like it was a nothing burger. And I was like, we just had a jobs report that was 12,000 people before revisions. Like,
Okay, yeah.
How is this nothing?
Let's move on. Lots more to talk about. Let's talk about next. We had a Fed rate cut last week. So 2 days after the election, Fed voted to drop rates about a quarter point. So we're down at about 4.75%. That's 3/4 or 4.5 to 4.75 in that range. So we're down 3/4 of a point for the year. Jerome Powell basically came out and said, hey, we're still in restrictive territory. I'm pretty happy with the progress we've made on inflation, but right now we're just trying to balance we want to cut enough that we keep jobs strong. We don't want to cut so much that we have inflation go back up again. It's a balancing act. He specifically said that he's happy with the inflation data that we've seen. We're somewhere around 2.1% for non-core PCI, 2.7% for core. Those numbers have actually looked lower than that if you just look at the last 3 to 6 months. That's the year average. More recently, those numbers are lower. So he's happy with inflation. I wouldn't say he signaled that there will be no rate cut come December, but he certainly set the expectation that there might not be a rate cut come December. So he said it's going to be data driven, same thing he's been saying for a while. But he definitely set the expectation that if things are looking strong, he's not sure where that neutral rate is, and they're going to take things conservatively. And so we may not see another cut in December, despite the fact that for the last few months we've been expecting it.
60-40 right now.
Is it 60-40 right now? Okay.
60-40, 60% still says we're getting that rate cut, 40%. And 60% is an interesting number because traditionally with this administration in the Fed, so Powell, that's kind of the threshold where if 60% is saying the wrong way, that's when they have their little leaks of an article saying that they're going to act the other way, that because they don't want the market to be hit too hard on an announcement. So they want that to be, below 60%. So it's interesting. That might be why it's at right around 60 right now.
Yeah. So for those watching on YouTube, there's the chart where it's 60% for December. Come January, let's see. So it looks like obviously the further you go out, there's obviously expectations for future rate cuts. So it's just December that people are questioning as of right now.
It's interesting too. If you let's look at this at a bigger picture, right? And if you look at the exit polls from the election, that the number one and number two issues that people said that they were concerned about were the economy and inflation, which are basically the same thing. And so that implies they're not happy with the way the economy is right now, right? Because they voted the other guy in. If that's their number one issue and they voted the other person in, to me, that makes sense that they're not happy with the economy and how things are going. And yet Powell comes out and he says, all he says is how good our economy is, how well things are going. And so there's a huge disconnect between Powell and the people in power and what people on the ground who are voting are feeling.
That's because the government makes up 40% of our GDP. So I talked about this on a podcast where I go, you got to understand there's two totally different types of economics that are going on. We have federal economics and then we have localized economics. So the federal economics takes in an aggregate of everything. Well, if you took out all the jobs created by the government, if you took out all the spending to the tune of trillions a quarter, that they're spending, if you take all that out and go down to mostly Main Street, especially in areas that are not affected as widely by this, you have inflation and you have more of a stagnant period on wages and house buying, things like that. So there is a disconnect, I think, between Main Street, right, and DC. And I think that this is something that has been building. It's not a switch over time. This has been building, right? And we've seen this get more and more every election, every year. This is it's an all-encompassing problem where the disconnect that people have is two different realities. So when you see somebody on a podcast like this or a talk show or something like that that's saying, our GDP grew 3%, everything's going great, the economy's doing good, we have job growth, and then you have all these people that are going, what are you talking about? Like, my world didn't grow like that. My thing didn't, because it's an aggregation of economic activity. And I think that's really important.
I think it's actually simpler than that. I don't disagree with anything you said, AJ, but I think it really is. It's pretty simple. It's that even if we saw inflation at 0%, meaning prices next month are the same as this month and the same next month and next month and next month, and prices just don't go up at all. Prices went up so much over the last couple of years that they're still super high. And it's going to take time for wages to catch up and for people to feel like they have enough money to buy things again. And so there really is. It's not necessarily a disconnect. It's just two separate measurements. There's the measurement of where are things today? Are things in good shape today moving forward? And the answer is yes. Inflation is right where the government wants it to be moving forward. It's right where it's actually a point lower than it is historically. I mean, inflation's not historically low, but relatively low historically right now. And so from that perspective, yeah, things look good. But we got so screwed over the last couple of years with inflation that we're still feeling that pain. It's like you get punched in the face, you break your nose. Yeah, in a year you go to the doctor, he's like, you're in great shape. Well, my nose still hurts. Yeah, well, that was something that happened 6 months ago, a year ago. That's going to hurt for a while, but other than that, you're perfectly healthy. And so we got punched in the face a year or two ago, and we haven't fully recovered, even though other than that, we're looking pretty healthy. And so there's the government numbers, and then there's what people are experiencing. And I don't think we're trying to pull the wool over people's eyes. We're not trying to make this disconnect. It's just the reality.
But it's the reality, though. Like, you can look, there's a disconnect. We've talked about this before. There's a disconnect between the data and what people are actually feeling. And if you look, I just ran the calculations over the last 4 years. If you took the inflation numbers, basically, if you started out at a baseline, we're up 19.5% in prices. So it's about a 20% rise in prices over the last 4 years. Wages, and that's the official number. I mean, I don't know how many people believe that's the actual number. So maybe in reality, it's more like 30%, 25 to 30%. People's wages in general, again, putting aside the statistics and all the anomalies, probably haven't gone up 20, 25%. So for those who are in the middle, who don't have much disposable income and every dollar counts, dude, there's a huge delta right there. And that's why they're in pain. And it, it doesn't affect the higher end because, whatever, if something's 10% more expensive. But for middle class, lower middle class, and certainly the poor, 20% increase in prices over 4 years is a big deal. And if you want, one last point is, if you want the Fed is supposed to be giving us price stability. So I would almost argue, why are you even doing 2%? But even if you do have a target of 2%, if 1 year you go up to 4%, theoretically, next year you should get down to 0, so you average that 2%. Right now,
if you remember back in the day, they did have this concept of inflation averaging, and they asked him about it. Oh, what about inflation averaging? And he gave some we're not doing that anymore. Basically just admitted that that's not something we're doing anymore.
They don't want the answer. They don't want the answer.
Well, and so I'll bring up one more thing that was a little bit concerning, that if you stayed to the end of Powell's thing, he did ask, I think it might even been the last question, or one of the last few. This woman asked, "What is your plan if we start to see stagflation?" And do you know what his answer was? I'll read his answer because I have the transcript here. He said, "So that's the whole plan is to not have stagflation, so we don't have to deal with it. So that's our actual plan." And then he started laughing. And so he literally just admitted they have no plan for stagflation, and that we're basically, if we have stagflation, we're basically screwed because he has no way to fix it.
Yep. And he also didn't roll out an interest rate hike next year. So he recognizes that anything can happen, even though he laughed that off. He was specifically asked, hey, could there be a rate hike next year? He's like, anything could happen. So anyway, let's talk about the results of the.
The TED Talk isn't over?
I'm introducing ideas.
Mauricio. Okay, we give Jay shit sometimes for going on and on and on, and I think he's actually doing a very good job here of breaking this up. And so you don't make fun of him, even if he does a good job. He's doing a good job. Let him go.
Thank you. So one of the reasons we're all excited about these rate cuts that we're seeing is that, in theory, they should hopefully lower other rates, like mortgage rates and credit card rates and car loan rates and all these other rates. Those are typically tracked off like Treasury yield rates. And what we've seen is the 10-year Treasury has gone up since rates were cut. Significantly, as opposed to down. And so we're not necessarily seeing the results that we want from these rate cuts. Now, this is also mixed with an election right around the exact same time. So there's a lot of stuff going on here. We can't say what the causation is or what's leading to this, but I'm curious what you guys are thinking is leading to Treasury yields going up. If it's certainly not rates, because rates are coming, interest rates, federal funds rate is coming down. So why are Treasury yields going up?
I think that's the first thing we got. Just so the Fed, right, setting rates, right, the rates that we actually all end up getting are very much determined by buyers and sellers, meaning that the people that are buying, if you have a lot of people that are rushing to buy these securities, these bonds, you have lower rates because there's so much demand. So to put it simply, everybody, if you had 100 bonds and you had 150 people that wanted them, you don't have to pay people very much to take them because so many people want them. But if I have 100 of them and I only have 50 people that want them, I have to pay people more to entice more people to buy them because I need to sell 100 of them, not 50 of them. And so I think what's happening is the big blob of money. I like to think of money as like this huge blob because it just moves around the economy, right? Depending on incentives and conditions where money managers and everything else think. And I think some of it had to do with the Trump effect, where it was like, we think there's going to be more growth. And so money starts to move into other asset classes that are benefited from growth. Like we saw the stock market has just been soaring, right? Well, interest rates start to go up because money is leaving the bond, meaning you don't have 150 people that want it anymore. You only have 100 people that want those bonds. So now the bond rates are going up to say, hey, no, come buy us. Stop going into things like the stock market. Stop going into other asset classes. We'll pay you more. Come buy us. Well, if everybody though is like, if everybody's rushing to buy bonds, yields will then go down. Why? Because they don't need to pay people as much. And that would be like a flight to safety. So if all of a sudden everybody's like, I need to buy a whole bunch of bonds because we're not sure about the stock market, we're going to move money out of the stock market, out of all these other assets, and we're going to move them in particularly secure bonds, right? Then those rates are going to go down. So we've seen a huge shift towards growth and people believe in growth, which also equals inflation. And so we see a huge shift, I think, in the money in the markets moving towards that. That doesn't mean that it'll last necessarily. It'll be really interesting to see if this boost in the stock markets, everything else is just this momentary money shift, and then it literally just goes away and it restabilizes and we have interest rates come down as things cool off and normalize, especially as we get new information in. But it is a move in the money of the blob of capital in the world to things like the stock market, which has just made it go up and up and up.
Yeah, and you're absolutely right, AJ. And again, you got to remember that the Treasury market, which we're talking about, this 10, the bonds, the 10-year bond, specifically it's all about 10 years, even though there's 20 and 30 and all 50 and all that stuff. But the 10-year bond, the Treasury market, it is the second deepest Treasury market in the world. This is not just a U.S. thing. There are foreign countries. In fact, I would argue most of the Treasuries getting bought and sold on the secondary market happen outside. So it's not just me and you or local governments who are buying or selling or institutions that are saying, hey, I want to sell my Treasuries. That's why the yields are going up because they're selling because they want to go put it into something more growth and inflationary. It's governments. It's everybody is selling these Treasuries, therefore driving up the yield. And it's because there at least they expect, the modern market is expecting growth and inflation. That's their expectation. Now, are they right? Who knows? And if suddenly you have some news that suddenly show that, hey, we're actually going to have deflation or recession, then everybody's going to, sell whatever stocks and real estate, and they're going to go buy treasuries, and that's going to bring yields down.
I feel like everyone's pricing in like Trump keeping his word all the way, like that we're going to get 60% tariffs on China, and like all of these policies that he wants to implement with his, the tax cuts and all of the, like, they're just holding him to his word that he's going to be able to pull all of this up, and they're literally pricing in like a year and a half, 2 years worth of things happening already right now. And I just think that's, yeah, like I think that's like look at his history. He already was president once. He already had, people forget, the first 2 years of his presidency, he had the House and Senate. And now you can argue, okay, he doesn't have Mitch McConnell as right now, who's going to be like as severely against him as the head of the Senate, or like you can make those arguments, but at the same time, like he only got one of those things done. And so, like, yes, is some of these things going to happen? I think moderately. Like, I think Trump's a negotiator, right? Like when he says, "Oh, I'm going to put 60% tariffs on China," like to me, that's just his negotiation tactic of anchoring. Like he's anchoring high so that Xi has to come in and be like, "Oh, 60%." Like his economy. We said this on the chat. We were talking about it. Like the China economy is struggling right now. Like they got issues.
They just announced $1.3 trillion after Trump was elected to bail out printing. They were injecting $1.3 trillion into their economy once Trump was elected to hedge off different tariffs, everything else. But even though, you're right that it's like, okay, so we know Trump it's also a sector move. So anytime you see mass sector shifts, like if the Democrats had won, certain sectors would have done better than obviously under Trump because their policies and the way they view it, like energy is an easy one. Green energy, right? If you look at all the green energy stocks, they did bad versus, oil companies or whatnot because of just the atmosphere. That actually doesn't mean that's how it's going to turn out, which is interesting. But it's where money and money markets think things are going. So governments, all of the institutional monies are repositioning now that they know the conditions that they're going to be playing in. So they're picking winners. And that move, though, shocks the system because all of a sudden in the short term for stocks, everybody's trying to get a hold of those stocks because they're like, oh, in 5 years, this will probably be better than this one. And other ones are selling other ones. And so it's this huge just money movement. Rebalancing act. And that can shock the system.
Yeah, I'm going to stay out of this one. 3 years ago, I was criticizing Biden for his economic policies, and nobody seemed to mind. Everybody seemed to be interested in my opinion, and now I'm criticizing Trump for his economic policies, and everybody's telling me that I'm an asshole and I just hate Trump. So I'm not.
People are telling you that.
You have no idea.
Are you really?
Are you just projecting your insecurities, Jay?
I'll do it. I'll take the criticism part.
You have no idea. I start my posts with, here's my economic analysis, absolutely no politics involved, and I'll get private messages saying you're just a Trump hater, you don't know what you're talking about.
You got to sprinkle in the good too, though. Like he should be pretty good for real estate, like in general.
No. I'm not. No, I'm just pointing out that I think Trump's policies, if he carries them out, which I agree with you, Kyle, I think a lot of it is just negotiating, and it's a lot of it's not going to be carried out. But if it is, it's inflationary. It's no different than if Harris were elected. We'd be sitting here talking about tax on unrealized gains, even though we all know it's not really going to happen. We'd be talking about the fact that, hey, billionaires are now leaving the country because they don't want to take the risk.
Yep, you're 100% right.
So yeah, you have to go in with the presumption that what was promised in the campaign is going to happen, even though we know there's a reasonable chance a lot of it's not going to happen. And so again, I'm not going to pile on. I've talked about the fact that I think several of Trump's potential policies are inflationary. It's everybody's talking about that.
That's not an opinion, though. That's just a matter of truth.
Yeah,
we're behind you, Jay. Don't worry.
That's not
anybody
that's listening to that. That's not Jay's opinion.
Hey, and we got 4 years of not having to discuss 1031s going away, so that's going to be exciting. We used to have to do that every year during the Biden presidency.
Okay, so now let me talk about something that's not going to get me called an asshole. Let's talk about the good Trump effect from last week. So anybody that's been paying attention to stocks and crypto, not so much gold, unfortunately, Mauricio, but stocks and crypto through the roof. So
actually, gold didn't do that poorly. It's just the U.S. dollar. Like if you look at like from Canada's perspective, gold was actually pretty good.
Yeah, fair enough. But obviously, stocks are soaring after Trump's win. They had been near all-time highs. Now they're well into all-time highs. And crypto is obviously the big winner here. I don't follow Bitcoin real closely, but it looks like it's gone from like 60 to almost 90 over the last week. And I mean, Trump has said he wants to create a reserve of crypto in the U.S. And so when the government's going to buy something, people are going to value that thing higher. And he's also appointing a lot of people to his cabinet that are pro-crypto. So that's obviously going to be good for crypto as well. So not a surprise that we've seen this spike in Bitcoin prices. But it's quite a spike. I mean, almost 50% over the last week. So for anybody that invests in the market or crypto, obviously you're very happy with what's happened over the last week.
Yeah, the dollar really. I mean, the dollar's gone up 5%, which is a big. Yeah, it went from like
over a 5-year period of time. There was only a couple months where the dollar has been like much stronger. On an average, we're at like highs. Like
and as you know, kind of what happened back in the last peak of the 2022. It's literally October 2022. I mean, our good friend that we've never really met, but Brett Johnson talks about this all the time. Like high dollar has all kinds of issues and permutations around the world, and it's not in a good way. Like if people have to businesses around the world, China. Imagine you're a Chinese businessman and you've got debt denominated in dollars, and now you've got to. You sell your product and then translate your yuan into dollars, and now suddenly it's 5% more. That starts to cut into your margins and really create some issues abroad. So we got to keep an eye on that.
Yeah, there was a good article. I don't remember all the details. If I can find it, I'll post it in the YouTube comments. But there was a good article about how the strength of the U.S. dollar can really destroy the productivity of emerging markets. So those smaller countries that are growing fast, basically for every 10% that the dollar grows in strength against their local currency, basically sets them back about 2 years.
Right, which could actually, and some of those things could actually hurt the U.S. economy, right? If our dollar gets too strong and crushes our imports. So
100%.
And guess what happens when the dollar gets? And we talked about this again. Kind of back to our arguments in the past about the reserve currency. But when companies have a hard time paying back their debt, they usually have to take out more debt in dollars to pay for the debt that they already have. It's this self-perpetuating cycle. There's more demand for the dollar because they need the dollars, and they're struggling to make those payments. They have to go get more dollar loans to go pay the dollar. It's a self.
At the end of the day, the problem is going to be, and this is regardless of Trump, this is regardless of Harris, whoever's coming in has it sucks. It just does. You got to grow the economy, get people's incomes up while lowering interest rates and not have inflation. So there's very few avenues that you can create a robust economy that is growing when we are already struggling with inflationary effects and a very sensitive economy. Because even though inflation is back down, it's back down when our interest rates are the highest that they've been in 30 years. So if you want to then get interest rates back down while the economy is growing and not just ignite, obviously, inflation, that is a really, really tough prospect right now. And I think there's very, very few avenues that you can accomplish it. And this is, once again, this doesn't matter who the president is. I think really we're at a point, though, and I talked about this last time, I hope they can try to do something, but you got to take it from somewhere. Really, the Trump administration is like, we're going to take it from the government, and we're just going to cut it out. Now, maybe they can do that. Maybe they can't. We'll see. But that is really hard to do. People want to afford houses. You can't afford houses at a 7% at where they are today. So you either need to so dramatically increase the supply of housing over the short term and lower the price of interest. You want people to get income raises to adjust for the inflation that we've seen over the last 2 years. But the moment people start getting huge income raises, they're going to go out and spend. We're going to have inflationary effects with that. So we're in this really tough spot where we don't have recessionary effects. We don't have job losses. We don't have debt restructuring. We don't have any of those things that you generally need to see when you have massive inflation, and generally you need to see to get interest rates down without having job loss, without having debt and money loss and restructuring. To get interest rates down to fuel that economy to get going again, that is hard.
Okay, let me round this out and we can move on. So we're recording this on Tuesday, November 12th. This doesn't going to get released until Thursday, November 14th. We're doing that extra day now just to button things up. But tomorrow, Wednesday, the 13th, so the day before this is released, we're going to see CPI numbers for October. So that should be interesting. We'll have inflation data for October. We'll see PPI numbers on Thursday, the day this is released. And then interestingly, not interesting, I mean, it happens often, but the Fed's going to have also November inflation numbers before their next meeting. So they'll have 2 months worth of inflation data and jobs data before their next decision to cut rates or not cut rates in December. So there's a lot of data coming, but pay attention to this week. And for anybody that's not subscribed, DREdaily.com. That's our Drunk Real Estate daily economics newsletter, where we'll keep you updated on all the headlines and the big economic news releases.
Guys, I got to tell you, it's awesome, everybody. And Jay's done a really good job on this. Really, guys, everybody that's listening to this, you guys need to go sign up. You need to get in. Jay's done an awesome job at it. Everybody sign up for it. It's really good.
We're almost at 1,000 subscribers, and we get like 60% open rate on these emails every day. So people are, and I've gotten some fantastic feedback. So
it's really good. Really
60%, even though Mauricio hasn't opened it once.
I wanted to find out, when you sign up for this thing and you don't get the emails, how do you actually access the newsletter?
If anybody else has signed up for DREdaily.com for our newsletter and is not getting the emails, can't find them, let me know, because I'm curious if it's a Mauricio user error or if there's a real problem.
Mauricio doesn't even use email. I don't even think he reads his own emails.
Your assistant's getting it every day, and she's
reading and deleting it.
Well, the problem is right now, I am my assistant, which is the problem. So that's probably part of the issue.
All right. Any final thoughts here, Jay? Because I feel like I thought this was going to be, we were going to have problems talking about this succinctly, but we didn't get too far into the tariffs, because that's a separate discussion topic. I think we did a pretty good job.
Yeah, I think, and we've talked about this for anybody that's listening that wants to hear more. We have a lot of good topics now that we have a new administration coming in. So we can talk about tariffs. We can talk about deportation and how that impacts the economy. We've got a lot of housing stuff to talk about. We've got more Fed stuff to talk about with Trump. So we've got a lot of good topics coming up in the next few weeks. So definitely.
Well, I know I've had so many messages because people are really confused. This doesn't matter politics, guys. The structural change that this administration has announced, we were talking about, this the other day. I'm like, this is for us. This is going to be content like crazy.
We've got 4 years worth of shows coming up.
It's wild, and we know our listeners have so many questions because some of the stuff we've never even seen, and its impacts will vary and be probably.
I think everyone needs to keep in mind too that yes, the you could do executive order for tariffs, so that's probably something that he doesn't have to pass it through. But if you go back to last time, as I said, he did have the House and he had the Senate, and it wasn't like everyone's acting like this is just going to be a cakewalk. Like he's going to propose something, it's just going to go through. It's not going to happen like that. We'll have it's maybe even a year before anything substantial gets passed, other than maybe the tariffs. So this
the U.S. government is set up to make things not happen. Literally, the U.S. government is set up to make it so you can't get things done. That's its purpose.
I think did we talk about it last week on the last episode? But I very succinctly remember the whole Obamacare, right? So Obama passes Obamacare, then finally Trump comes in. He's got everything, and it's so easy. Everybody hates Obamacare, but nobody could figure out how to replace it because they wanted to get rid of it, but they couldn't come up to an arrangement. So it finally failed.
Obamacare sucks. That we should just stick with the ACA.
Can't get it done.
All right, we ready to move on here? Crank out another topic because so earlier today I attended this YouTube live and it was so good. The audience was glued to their screen, so attentive. And the topic of the webinar was how Trump presidency will affect the rules and regulations surrounding syndications. Specifically, it was kind of skewed onto real estate. So I thought it was very, very relevant to our podcast. And luckily, I was able to track down the presenter, and he agreed to come on our show. So tonight, I would like to formally welcome Mauricio to the program. Mauricio, how's it going?
It's going well, my friend. First of all, for the record, this is not a webinar. This is a show that I do every week. It's a live show. It's called Real Estate Syndicator Live, and it was a fun one today. So I decided to. Everybody's talking about the tax plans and the policies.
So we're not going to talk about it. The fact that there was literally, I'm not going to call her out because we know her, and there's a greater than 0% chance that she'll listen to our podcast. But she literally fell asleep during your podcast, like to the point where I was staring at her. She had her camera on, and I watched her jolt awake in the middle of your podcast.
I don't understand why you come on the show if you're then just going to kind of take a nap. But anyway, so we talked. I don't know if there's any specific. I know I went through a few of them, but I thought it would be fun to really on the angle of, as you know, I'm a securities attorney. So on the real estate syndication side, there's just a lot of sort of things I think are going to happen. I would make a bet, or it's almost like a mini predictions episode for me. And so I just went through a few things I think are coming down the pipeline now that Trump has come on. And I don't know if there's a specific order you want to take, but let's just start with, let's see the broader ones. I think accredited investor, we've been talking about the update to an accredited investor definition for a couple of years now, or actually longer. I've been talking about it for much longer. I think now with Trump coming on and having a new SEC commissioner, right now we have Gary Gensler, who's been the commissioner obviously for the last 4 years. Most likely Gary Gensler, even though he's not required to, he's probably going to step down. That's kind of been the tradition that the outgoing administration, they basically resign. But even if he doesn't resign, a new chairperson will be, announced from his party, and that's the person that controls the agenda. And so, accredited investor, for example, they've been talking about, increasing or not increasing, but expanding the who is an accredited investor to include some kind of a test, right? And that to me is the easiest one of all of these policies that I think are going to change, because we already have a rule. The SEC already passed a rule that basically made people an accredited investor if they passed a certain test and got certified. Like that's already in the books of the SEC. It didn't actually get implemented exclusively, because part of that rule was somebody had to administer the test and they never got around to certifying who could give the test. So right now the rule's in place. You can get certified, but there's nobody that's designated to be certified. But that's an easy fix. That's just basically the commission coming.
I got it, Mauricio. Trump University. They're going to certify everybody.
That's right. Trump University. Yeah. So whether it's FINRA, whether it's Kaplan, I mean, if you guys, those professionals who take the medical boards or the legal boards, the Kaplans, or even if securities, even if you take a Series 7 exam or Series 65, all these organizations out there that already give courses and prepare you for the test. So my guess is one of those will give the course. And again, I just don't know if it's a 6-month course, a weekend course, a self-study course, or whatever. But I think that's coming down the pipeline. There's so much support at least in the House of Representatives too. So like even Congress is ready to go. It got stonewalled in the Senate, but the Senate is also flipped now. So I don't know. I think that's probably the easiest thing to come. Not only the easiest, but probably the quickest. I think if anything's going to move fast, that's one of them. So that was my first prediction, that I think the accredited investor expansion testing. Yeah.
But I don't mean to interrupt your TED talk. But just for those that are listening, can you give a general overview for how SEC rules are passed? Like, are all these things going to be Congress needs to pass it, or can just the SEC?
Yeah, that's a great question. So no, none of these are Congress related. I know Congress can pass a law, but Congress has already given the SEC, the Securities and Exchange Commission, broad powers to implement the securities rules. So all of these new rules that we've been talking about are just SEC rules. And so those are proposed and then voted by the SEC commissioners, and there's 5 of them, right? The chairperson being Gary Gensler, If you've heard of any of them, that's probably the other ones. And there's 4 other ones. Interestingly enough, even though the president selects those commissioners, they have to be balanced. So only 3 of them can be from one party and 2 in the other, so it doesn't get completely skewed. And they serve 18 months. And so every year, one of them is up for renewal. But the way the process essentially works is that the SEC, if they want to, if the chair decides this is important enough and they want to put it on the agenda, they will draft proposed rules, right? They'll draft a 50-page, 100-page proposed rule. They will then submit it to the public for comments. There's a comment period where all the stakeholders can come in and write letters. So in our world, it's usually, attorneys, investors, consumer protection folks, like whoever has a stake in this can write a letter supporting or suggesting changes to the proposed rule. And then that's usually a 60-day comment period. And then the SEC takes all those comments and decides whether they're convinced to change or modify the rule a little bit. And then they generally come out with the final rule, 2 to 3 quarters after that. And so that's what I would expect generally to happen today. My point, though, is that this already happened in 2020. So in 2020, the SEC proposed the rule, got the comments in there, passed the rule. So we have a final rule. This is not a proposed rule. This is final. They just haven't implemented it because we don't have those designations of who can give the exam. But that's going to be a fairly simple thing. So I think that's the easiest one. And it's really fast if you want to, you want to do the win.
And so is it possible that we're going to wake up tomorrow and the SEC is going to say, hey, here's the answer. Here's the rule. We're ready to go. Or is it they meet every 6 months and we see the agenda. We know it's going to be talked about.
First you need a new commissioner, right? So right now, nothing's going to happen. Even if, at some point they'll probably announce his nominee for a new commissioner or a new chair, whatever. But that's not going to happen until January 6th. And then it's not going to happen. Then you've got to get it approved by Congress. So there is a process to it. So I wouldn't expect a new commissioner until middle of January. And then the interesting part will be, does Gary Gensler resign? Or does he just not resign? He doesn't have to. His term's not up until, I believe, 2026, actually. He's got quite a little bit of a term. And so the question becomes, does he step down or does he just stay on the commission as one of the Democrats and gets replaced as chair? But the chair is the one that really, just like Powell, right? Powell's the chair of the Fed. He has a lot of power because they dictate the agenda. What's going to get brought to the attention of the commission? What's important? What's not important? What's going to get tabled? What's going to get brought to the forefront? But essentially, you're just going to need a vote by the commissioners. The 3, you need a majority vote. So 3-2 will get you a vote. And all you need to do is figure out who's going to get designated as people who can give the exam, put it up for a vote, and it'll pass. And even if that's one route, the other route is for Congress to do it. And then Congress has already voted 10 times. Actually, there's 10 different statutes that are bills that came through the House of Representatives. The most famous one, or the original one I've talked a lot about, is this Equal Opportunity for All Investors Act, which literally overwhelmingly, I got the numbers here, passed the House of Representatives 383 to 18. I mean, not even close, right? So it passed basically, again, codifying what the rule that the SEC was, that you can become an accredited investor by taking an exam. And they specifically wanted FINRA to administer the exam, and they kind of gave some parameters of what that looked like. It just got stuck in the Senate. Like the Senate had no interest in moving it. It got stuck in the banking committee for a year and a half. I guess that bill technically is still there. So once the new Senate comes in, if somebody wants to take that up, they can, get it through committee, get it passed, and that could actually be a law as opposed to waiting for the SEC to do it. But my guess is now that you've got a new administration, there's no reason to go that route. It's going to be much quicker to have the SEC do it internally with their staff.
Is that the only change that's going to be to the accredited, or are they going to go revisit that, changing the 1 million to 3 million and stuff like that?
Yeah, that's a good question. I mean, that's a little bit, that's sort of more pro-consumer. So maybe that's a little bit less likely. The small business subcommittee at the SEC is very pro-business and pro-expanding the definition. The commissioners wanted to not only expand that to, expand the accredited investor to taking the test, but they also wanted to increase the automatic levels from $1 million net worth to 3, probably 3 is what the number was going to be. I think now with the new administration, why would they do that? Like, I think they'll probably just keep it at $1 million because they're going to be more pro-business. They're going to be more wanting there to be more capital formation, more making capital raising easier. That's really ultimately their goal. And so I think you're going to see it's much more likely to just have the accredited investor pass in terms of the test. And I don't think they're going to be any rush to make it harder for people to become accredited because at the end of the day, that's not what they want. They're less concerned about consumer protection. They're more about free markets. So I would expect the the test to come through, I wouldn't make a huge bet on the increase in the dollar amount. The other big one, I think, is the bonus depreciation, which is not just for syndicators, but any real estate investor. That's a big deal, right? And bonus depreciation, as you guys know, passed the House earlier this year, also overwhelmingly 357 to 70. And it just didn't make it through the Senate. The Senate knocked it down just recently, I think 2 or 3 months ago, maybe 2 months ago, 48 to 44. They nailed it down. But I would anticipate, this is something you guys definitely should have an opinion, so I want to hear your opinion. I'm going to go out on a limb, not a huge limb, but I'm pretty convinced that maybe not in 2025, but actually I'll take that back. I think at the end of 2020, before the end of 2025, you'll see bonus depreciation passed and be retroactive so that you get 100% bonus depreciation, whether it's back to 2022 or 2023. But I think you'll see that. I don't know if you guys concur with that or because again, we're talking about a president-elect.
I think it's pretty clear it's going to pass because the general rhetoric around that not passing wasn't that people didn't like it. It was kind of that they just didn't want the Democrats to get a win, like right before the election, and they would have been able to roll this out as, oh, look what we just did, and it would be like a small boost for the election. So I think it's going to pass, but the rollback would be nice. Like that's like, will we have to do change our previous tax returns? Because we've already filed for the last 3 years.
You amend them. Yeah, it'd be a nice little tax windfall for everyone, because imagine how happy your investors are going to be when you amend your tax returns and give them an amended K1 for them to then go ahead and amend their tax returns and get a tax refund. So, I mean, the House had the retroactive provision. So I forget it. I think it was 2 years. So it passed in 2024. So they were going to do retroactive to 23 and 22. So I'm going to expect that now. That would be my expectation. So anyway, so I think the bonus depreciation is another big one that's coming down the pipeline. That's going to definitely be through Congress. So, and that, I don't know if they would, honestly, I don't think they'll take the exact same bill. I mean, they'll probably have to redo the House and redo the Senate and then have reconcile those two bills and get a final bill. But I can't see a world in where that doesn't happen. So unless somebody gets me pushback on that, that's kind of a slam dunk. I think the accredited investor test and the bonus depreciation is a slam dunk. The other one that I thought of really interesting, I haven't heard anybody talk about this, but I talked about it this morning on the show, is the Corporate Transparency Act. We've talked about it a couple times here on the show, and there's a lot of uproar, especially from the privacy, government out of my face kind of folks that don't like the Corporate Transparency Act. And just imagine how many entities, LLCs, that Donald Trump has in the Trump organization. He's probably, if it's not 1,000, it's definitely in the hundreds, right? And so somebody in his office is having to deal with this. I'm sure he's well aware, probably doesn't like it. And he's got the cover. This is why I think he would do it. Because number one, again, that one is a government subcommittee, right? So it's FinCEN, the Financial Crimes Enforcement Network, which is a division of or a subcommittee of the Treasury Department. So he's going to be running that department. And that already got challenged in court, right? There's a federal court judge in Alabama that ruled it unconstitutional. That's in the appellate process. I think he has the cover to simply say, hey, it's been challenged. Let's wait for while the courts, it's making its way through the court system. Let's put a stay on it. Let's not enforce it, and let's see what.
But it goes into effect before he takes office, though, doesn't it?
Oh, it's already into effect. It's already started. It came into effect January of this year. In fact, for those of you who haven't seen our episodes on the corporate transaction, please go see it because you do have until the end of the year, which we're down to 50.
Sorry, I misspoke there. Like we have to submit all of our information before he goes into office because we have to submit by the end of this year, right?
Yeah, no, you would have to, yes. It would not, 100%. You would have to submit all of your entities from prior years for sure, and most of the entities from this year, you'd have to submit that this year. But I'm just talking about moving forward, the entities that you're going to create next year.
What are the chances I don't submit and he pardons me?
I don't know. Did you storm the Capitol?
Because I have a lot of I've submitted like 80% of my entities, but the other 20% are just pain in the butts because there's so many members, and it's horrible.
Not to go off on a complete tangent, but speaking of pardons, I heard this rumor that they wanted Biden to step down because so that Kamala Harris can be the first president. And I'm like, there's no ways. Everybody's like, there's no way he's going to do it. He's spied it. I'm like, but if he can get political cover to pardon Hunter, his son. He said, hey, if you step down, we'll give you a free pass to go. Then that might be enough.
I've always said this. Like, why wouldn't he? Like, what's like? He's not coming back. Like, it's not like he. he's just retiring. And we're never going to hear from him again. He's not even going to go off and like do speaking engagements. Like he's literally just going to. We're not going to hear from him. So like, why wouldn't he pardon his son?
Yeah.
Like
stay in power. Like, why would he resign? Just pardon him. Screw you. I'm just going to pardon him. You guys are going to not like me, but screw you anyway. And I'm doing
He's still pissed that he was forced to step down. And
yeah. Anyway, not to get on a tangent there, but I just, as you said, pardon. So anyway, I think Corporate Transparency Act. I could see Trump putting a stay on it. I think that's the way he would do it. He wouldn't repeal it. He would just say, hey, there's a court challenge to it. Let's let it make it through the court system. It's going to go to it is in the appeals court at the federal level. So eventually it would get to the Supreme Court. And if the Supreme Court knocks it down, then I think that's a good cover for him to do that. So I think Corporate Transparency Act may be on the chopping block. And then my favorite, I was talking about this a long time, and I'll wrap this up with this one because it doesn't affect everyone. But man, it wasn't a final rule like the accredited investor rule, but there was a proposed rule that the SEC put forth right before the change in administration in October of 2020, essentially allowing in certain situations people to get paid to refer people and raise capital for others. So I'm a broken record out there on social media talking about how you can't raise money for others. You can't compensate people that offer to raise money for you in your deals unless they're a licensed broker and blah, 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 blah. We talked ad nauseum for that. This rule would allow you to make referrals. As an attorney, I could say, hey, I've got one of my clients. They're looking to put some money to work. I can make an introduction to you guys and say, hey, I'm going to introduce you to Bob. And you guys talk to Bob. And if he invests in your deals, I can negotiate some kind of a commission, a part of the GP, what have you. And that is a proposed rule. So that's going to be a little bit harder. But I do believe that's going to come back on the table. I think what's going to happen there is you're going to get a new proposed rule because they're probably going to want to do another comment section. And so they'll probably resubmit the proposed rule. We'll see if it changes at all. And so we'll go through that process again with a comment period. But I would expect some sort of a finder rule to pass in the next 4 years, allowing people to make referrals to other sponsors and get paid a commission. Now, there's some limitations, right? Only accredited investors, no general solicitation. So you can't go market this thing and then go refer people. They would already have to be in your world before you make the introduction.
So Mauricio, is this a fancy way of you saying that? Because currently, like when we have a syndication, basically the only people who can raise for our deal are people who are already integral to the deal, who are already part of the deal, doing other stuff. We can't just go and be like, hey, AJ, by the way, you have nothing to do with this deal. Come in and raise some money from your investors for this deal. You don't have to do anything. Don't worry. Just bring the money. Currently, you can't do that. So what you're saying is we potentially could be able to do that? Yeah,
this would be almost like an exemption to having to register as a broker-dealer. Like right now, the only exemption we really have is if you are really the syndicator or a legitimate co-GP, you fit into the issuer exemption. But most of these people are just being brought in to raise capital. They don't fit into the issuer exemption, so it's basically an illegal payment. This would allow you to get paid a commission, transaction-based compensation, so long as you limit it to accredited investors only. You don't advertise to get the original referral sources. You have a written agreement with the sponsor. You disclose, obviously, to the investor that you're getting a commission because that certainly has a fact. And you can actually participate a little bit in the deal. I mean, you can be in phone call. You can be in the calls. You can source the deals. You can share the information with the person. It's not just, hey, I'm just going to make an introduction. And I was super excited about this when it came out in 2020. And I was telling people there's a 60-day comment period. So I'm thinking, February of 2021, they'd have a final rule. Then it takes 60 days for it to be like I was pretty pumped that in 2021 it would happen. And then I really quickly realized they're tabling it. In fact, one of my colleagues, one of the SEC attorneys, actually, they told me they called the SEC to find out what the status was. And they were basically, it's been tabled. Like we're not doing anything.
But Mauricio, wouldn't this create less legal work for you? Because a lot of our PPMs have wording around that.
Yeah, it wouldn't create less work for it, but it would make my life easier because then I wouldn't have to worry about all of these people that are literally saying that they're doing it right, but really they're not. So
you'd have nothing to talk about on your
That's YouTube true. Yeah, I would have nothing to talk about. That would be my concerns. I would have nothing to talk about because this is going to be legal. So. Yeah. So anyway, those are kind of the big ones. I don't know if I left any out. If you think, because somebody asked me about opportunity zones at the webinar, which I hadn't thought of the opportunity zones. And part of me was like, I've kind of given up on opportunity zones. This was a rule that had passed or a law that passed trying to incentivize people to invest in certain areas, opportunity zones, and they were going to get some tax breaks. maybe they do address that, because I don't think it's been as used as they thought it would. I certainly don't see much use of the opportunity zone. So I guess that could be something where they make it a little bit more attractive and maybe relax some of the rules so it makes the opportunity zone investments a little bit more appealing. Because right now, with the restrictions of getting that big tax break, which basically means if you invest in a particular opportunity zone, the big one is that you would if you hold that property for that asset for 10 years, you wouldn't have to pay any taxes on the capital gains, which is a nice thing. But it's just so many restrictions. You've got to basically put so much money into the deal. It really only applies realistically right now to developers, because there's no way you could put enough improvements in the property to make it worth it. But maybe they relax those. Maybe you don't have to double the basis to get the thing. Maybe you just have to buy it and make a little bit of improvements. So all these multifamily deals that do have value add, they just don't have double the basis in value add. Maybe those can come in and take advantage of these tax benefits. And basically, just as a high level, the opportunity zones, the first part of it, it's kind of like a 1031 exchange, except it wasn't just for real estate to real estate like kind. You could literally sell your business. You could be a doctor, sell your practice, make all this money. If you invested into an opportunity zone deal, would defer those taxes for a certain amount of time and then pay no capital gains after 10 years. So it was a kind of an attractive thing, but in my world, nobody used it. And I think maybe they could make some changes to incentivize people to use the opportunity zone rules a little bit more, and really, because the whole point was to revitalize some of these dilapidated areas. Although some of these areas were not so much in dilapidated areas.
Yeah, every state kind of got to designate their own, right?
Yeah, I think there was one in every state. So some of these locations were I mean, obviously you think of dilapidated, I was thinking a lot of stuff in Detroit, like a lot of those Detroit, Michigan kind of types. But they're also, I don't want to say it was in Beverly Hills, but it was in some really nice neighborhoods. I'm like, that's an opportunity zone, really?
It wasn't like that in our area, because I remember when it was coming out, and we were still investing in Philly at the time. We were like, oh, where's it going to be? Where's it going to be? And then it came out, and it was kind of these shitty areas, and we were like, damn it, that we didn't want to invest in. But whatever happened to the hurricane opportunity zones? Like, I remember back when, what was it, Katrina with New Orleans? How basically they designated the city as like an opportunity zone where you could come in and you could take your capital gains and invest it in revitalizing New Orleans and like save all the capital gains. Like is it just we have too many hurricanes happening now? They can't do that anymore.
I think that I don't know the specifics. I don't remember that one specifically, but it's usually the devils are in the details, and it's like they just have. It sounds like a good idea, and then you get to implement it, and you see all the restrictions and all the hoops you have to. It's just sometimes it's just too much, and it's like I don't. Again, for this one, I think there was a requirement. There is a requirement in the opportunity zone that you have to substantially improve the property, and basically substantially improve means you've got to spend basically double. Like if you buy the property for $100,000, you've got to put $100,000, or basically the value of the property, maybe $80,000 into it. So you buy $1 million building, are you really going to spend $800,000 remodeling it? And for my clients, that usually they don't do that. So unless you're developing it, it really doesn't make that. I think, AJ, for you, it probably would have made sense because a lot of your self-storage, you're building it from scratch. So you could buy something, but I don't know if that's the right.
Yeah, or you convert some weird stuff like paper mills and stuff, right?
Yeah, you get to convert a lot of stuff. The problem you run into, though, with a lot of opportunity zones is they're opportunity zones for a reason.
Right.
It's not because they get hit by hurricanes. It's because they suck.
Right. Do you really want to build your self-storage in Detroit, whatever, in the downtown Detroit, Michigan, or south side of Chicago?
No. They're opportunity zones because they're not growing. And the government seems to forget this. Like, oh, well, we'll just give you a tax break in this area that has negative income growth, crime that's skyrocketing. Why don't people want to build there? It's like, because it sucks. So I think that's one of the biggest flaws with the opportunity zone. I think there was some good that came out of it. I built in an opportunity zone, but I would have built there whether it was an opportunity zone. It didn't matter. It was the opportunity I had.
Yeah, I feel like that happened a lot. Opportunity zone was more like a luck of the draw thing. Like there was very few people who were like only researching, I'm only going to do an opportunity zone. They just had some options. They're like, oh, hey, this is opportunity zone. I'm going to shift my strategy a little bit.
Exactly. And when you go into certain places, I mean, like when were we in New Orleans for like, when were we there, Kyle?
Bigger Pockets, like
yeah,
3 years ago. Yeah.
Yeah. And I was like, holy crap, this city, like it was rough. So, I mean, when you're walking around and you have fundamental issues like some of these cities have, saying that it's an opportunity zone, it's not like investors are clamoring over each other to jump in and buy stuff or revitalize it.
It's almost like they have to, as a contingency on that, hey, it's an opportunity zone. If you put money into the zone, we will also match those dollars and increase, police presence and law enforcement. And that's kind of like that will clean up the street. All that
or just make it more lucrative. Follow the money. There's always a price, right? Like as AJ says, we don't want to invest there because it's a shitty area. Well, if you pay us enough, we will. That's kind of yeah.
But you're gonna have to pay it. So,
all right. Anything else, Mauricio? That was that was uplifting. I'm pretty excited about some of these potential changes. We're going to be able to raise money without having to do any work on the actual syndications. Accredited investors will be able to just bring in all these people who couldn't come in anymore. Things are looking up.
Yeah. Who it really benefits, and technically it could benefit somebody like me, like lawyers. But you know what it really affects is the tax planning people, because when you're doing some tax planning for your clients and you're like, hey, you really need to invest in some real estate or some oil and gas because of the tax benefits. So I recommend you go out and do that. There's a great opportunity for them to say, hey, I've got already some preferred people that I like to work with, or I've known these guys for years. They're really top-notch people. Let me make an introduction, and you can make your investments over there for your tax benefits. And then now the tax folks will be able to get some kind of a compensation for that, so I think that probably benefits the tax people the most.
For sure. Yeah, well, actually, you know what I was thinking about is funny. Obviously, oil and gas, the tax benefits of oil and gas, were 4 years of those are pretty safe. Trump's run on the platform that oil and gas is going to be a focus of his. But then he's got his best friend now is Elon Musk with his all of his Elon Musk has the solar company. He has obviously Tesla. He has a lot of electric renewables in his companies. How's that going to work out? How is he going to balance the tax benefits going towards the oil and gas plus help his buddy out with Elon Musk? It'll be interesting.
I think it's happening now. You get them both.
It'll probably be a cutout or something. Remember there was a carve out for GM on those cars? It was just GM gets more than everyone else.
You'll get the government contracts are where it's at, right? So Elon Musk will get the government will pay him to go launch some satellites. They'll pay him to build underground tunnels for his boring company. They'll start buying some of their government cop cars, electric, Tesla, whatever.
That's where it's going to come.
Yeah.
Speaking of richest people, one of the number one headlines after the Trump win is how the top 10 richest people in the world got so much richer after Trump's win. So I figured that would be a nice little top 10 there of saying, okay, who are these rich people and how much richer did they actually get?
Let me start. I think number 10 is AJ Osborne. He bought a third plane, and he's got to be on the list there somewhere, right?
Somewhere right there. If I'm not, I just barely missed it. Just barely.
So I'm looking at the list, and actually, no, 11. Sorry, man, you just barely didn't make the cut here.
Shoot, dang!
You were right after number 10.
Right after
Steve Ballmer. Steve Ballmer, who's got a 145 billion net worth. You were right after him.
There. Right after.
Does he still own the Clippers? Does he still own the Clippers, by the way? Did he sell those? Remember he bought the Clippers for $2 billion, and by then it was oh my God, $2 billion. But I wonder if he still owns it. I'll look it up while you guys are doing this.
I haven't seen that he sold it. But perspective before I throw this out, the S&P went up 2.5%. So anybody whose net worth didn't go up significantly more than 2.5% on this list, I don't really think that is everyone's oh, it's because Trump got elected. All these rich people got richer. Just the general stock market went up.
Anyone that had the same holdings had the exact same increase in their exact same wealth.
There's only one person that got significantly richer simply because it was Trump.
Okay, don't spoil it.
We all know who it is.
But if we go through Steve Ballmer, number 10, his only went up 2%. Warren Buffett, though, which was interesting. So this was kind of conflicting here, I thought, because right before the election, I don't know if you saw the headlines with Warren Buffett, is he kept loading up on cash. He was selling everything. And that was the headlines is, how much cash Warren Buffett is loading up on. But then after the election, Warren Buffett's went up 5.4%. So I don't know if the implication was that he just kind of took some chips off the table and, hedged his bets, and he would have done even better if he hadn't done that. But
no, it was Berkshire Hathaway, his company, that was loading up on cash. But after the election, Berkshire Hathaway stock went up. And so despite the fact that the company went to cash, the stock still went up, and he owns the stock.
So interesting little thing. And another interesting, this top 10 list, it's basically American tech moguls. But because next you got Sergey and Larry are next, and then Bill Gates. And so they were only like somewhere 3%. Bill Gates only went up 1.2%. That French guy who sued Elon Musk the other day, the guy who owns Louis Vuitton and all those luxury brands, his went down 1.6%. So he apparently Trump's not very good for the French or just foreigners in general. Shocker. Larry Ellison, obviously, another Larry Page, Larry Ellison, his went up 5.4%. So the tech seems to be doing okay. Zuck stayed even, didn't go up at all.
You think Zuck is sweating a little bit? You think Zuck is sweating?
Yeah, he's
barely over 200. Yeah.
His 202 billion just stayed the same. So I think he's a little bit nervous what his prospects are. And then we get to the top two.
He's going to move to Singapore?
Maybe. He's going to go to, what was it, Ireland? And then the top two, Bezos, his went up 3.2, so not significant. And then number one, as we already talked about it, started at 290 billion, Elon Musk. What percentage? What do you think he had the 1 day gain of his net worth?
1 day or last few days? 12%.
No, the one day right after the election.
6.
Now I'm gonna that 6 to 8 sounds about right.
Mauricio, no guesses?
No, I was just wondering about what
actually it could be more. It could be 10.
10.1%. 10.1%. His net worth went up in 1 day. So
how much net worth was Baller?
Balmer was 145 billion.
Oh, okay, because I was just looking up I always remember the Mexican telecom guy was always in the top 5, and I just looked it up. He's only at 105, so I guess he's dropped down to probably the top 15 or top 20. But because he was always in the top, richest man, and you didn't mention him, so
he's been sleeping in the past couple of years.
Anyway, pretty good day for Elon. I don't know if you guys watched the interaction with him and Tucker Carlson, where he was basically like, "You're all in, huh? Like if Trump doesn't win, this is a pretty big bet you're making. You're pretty screwed." And so he made a pretty big bet, and it paid off pretty well for him.
So did Zuck. Zuck said, "I won't vote for Democrats this election," and it was like he's like, "Uh-oh, I'm in trouble. It's like
Elon went real all in though. He made quite a few enemies. But as I said, he paid off. Pretty good bet. Usually does pay off for that guy. All right. Let's finish this off with a game. Jay sent me this new Reddit where it basically just proposes different scenarios. So I've been going through that, combing for some good ones, and I modified a few that I got a couple in the hopper here for you guys. So my question to you guys is, the movie Groundhog Day?
Yeah, great movie.
I read this one.
So, I changed it, Jay. So don't know that. The question is, if you could do just on cue, do one Groundhog Day. So you could just repeat the same day over and over and over. First of all, A, would you do it? And B, how long would you do it for?
Well, yeah, I would absolutely do it if I knew I could do it for a week or something. I mean, right?
Yeah, that's true.
You could but think about anything you ever thought of doing, and you knew that everything would just be reset the next day. You could do it. You could die and everything will be fine. You could take your time. You could learn Spanish, take 6 months. You could improve yourself. You can get really
5 years.
Jay would do 5 years. Wow. I was going to say the max is a year.
The same day for 5 years?
Yes. You go over and over the same thing.
You would go nuts.
But you don't have to do the same thing. That's the key, though. It's just your stalling time.
5 years is about 1,700 days. That doesn't, in retrospect,
5 years is a lot. I was thinking a year.
Okay, maybe I could maybe do 1,000 days.
You listen, you wake up in the morning and you know exactly what's going to happen in your day.
No, you don't. That's you could change it every time. That's the point. Is like I could figure out like I could take my kid, right? I could be like, okay, let's figure out what she's awesome at. And I could literally like just try every single thing that she could ever possibly try and then figure out, hey, she's awesome. So that at the end of this would be like, hey, this is what you're going to do the rest of your life.
And you didn't miss any time.
Right. You didn't waste anything.
So I could just like take a vacation day and I could just spend all my money. And then the next day, all the money's back in my bank account. I do it again.
You could spend a day like eating the worst food ever and you just wake up the next day the exact same way you started.
I would do like 2 months, but the only thing I would do would be option trading. That's it. And I'd figure out the highest leverage on the most obscure derivatives that I could find. And then on my last day, I'd take everything that I had and I'd put it in and I'd just like do it.
Hey, AJ, you only get one day for Groundhog Day. You got to wake up. You get the 24 hours.
Yeah, but he can try different things.
I can try. So I can go over those time. I can figure out what would be the highest return on which option in that one day. Or I could do a spread of like 5. I would leverage everything and then do it and then just make it ridiculous amount of money.
Does my wife wake up in a good mood that day?
You get a day.
See, that's the thing. Even if she doesn't, Jay, like you could spend that week trying to figure out how to like.
I'm not. If she wakes up in a bad mood, there's nothing I'm doing that day.
5 years, baby.
5 years.
With my luck, my wife wakes up sick. I'm taking care of the kids all day.
AJ's 2 months. Mauricio, are you doing it and how long?
Well, basically, so I could just go buy a different bottle of wine every day and do whatever I want. And then
exactly,
like instead of doing the option thing,
you can steal it. See if you get away with it.
Ooh.
I'd totally go Grand Theft Auto.
Yeah.
Like, absolutely. You know that nothing matters or doesn't. Like, just try to see what you could get. What could you do? Could I really rob a bank? Like, really? Could I?
Yeah, just give it a try. Like any crime you want to try.
I'd find a flight up to Philly and just mess with Kyle like every day for a year.
I don't think I could do a year. I think 6 months. 6 months is long enough for you to like. I could learn like a language. I could do I could like improve myself and still get a bunch done. But like then 6 months, I feel like you'd go crazy after that.
Because if I remember the movie, it was like the same stuff though. Like your wife would be saying the exact same thing to you every morning. You'd be when you go out the door, the car would almost run you over, and the garage.
My wife says the same thing to me every morning anyway. That's why I asked, is she waking up in a good mood or a bad mood?
Mauricio, that's only like the first 5 minutes. You could say something different to her back, and then she's saying something different to you. So it's like it could change immediately.
Is your wife always waking up disappointed, and then you got to make that over, Jay?
Sadly.
Anyway, so Mauricio, you're doing it though, right?
I am doing it. I misunderstood the rules a little bit. I just thought it was going to be the same thing every time. Or I mean, obviously, I know you can try different things, but yeah, if that's the case, and I could just have an adventurous day every day and try something new. And if I don't like it, I do it again the next day. And then fuck it, I might do it for the rest of my life.
Here's the funny thing. I actually, like, my family and I last night sat around for about a half hour and went through a bunch of these, and that was one of them. Kyle changed it, but the original one was like you go back to when you were like 19 years old or something.
15, I think it was. Yeah.
15 and relive that day. And so we were actually talking about this last night.
But imagine like you, especially you guys that have a little bit of cash somewhere, like you could I could just be like, okay, I'm going to go rent a private plane, a jet. And I'm going to fly to Europe. I'm going to spend $100,000 to go, and then I can just do that every day, and I can just go to a different location every day.
And then on the way back, you could like overthrow the cockpit and crash it just because you're like, I wonder how this would go. And then you just wake up the next morning, you're fine.
just don't fly anywhere that's too long of a flight, because by the time you get there, the day starts over.
Yeah, it's ruining your day. One strange, you guys probably haven't seen this movie. There's a movie called Palm Springs. It's got Andy Samberg in it, and it's basically Groundhog Day, like a modern version of it. And it's a really good movie. I'd suggest it was kind of like an undercover movie. It wasn't a huge budget or anything, but go check it out because it's the same premise as this, and it's pretty. Don't give me Jay. Screw you. Do not stop. When I'm in the middle of trying to say something, we just went on for 10 minutes and you give me the hurry up thing.
That wasn't a hurry up. That was when you are done talking. Let's move on.
Okay. Give me
I want to put my T-shirt on to see how big this thing is and see how extra large my T-shirt is over here. Oh,
I'll get you.
It's like a skirt. Like if I stood up, it's like a mini skirt. You know, it's like a mini skirt. It goes all the way down.
I'll get you a better one, Mauricio.
No, it's good. It's all good.
I'll wear mine for the next episode. Jay, you're going last. Mauricio, what do you got to plug?
I am going to plug. I'm going to plug Real Estate Syndicator Live, but I'm going to plug the Facebook group now. I got about 4,000 members of the Facebook. If you're a real estate syndicator, go to Facebook group Real Estate Syndicator Live. Come join the community. I hang out there all the time. So if you're a syndicator, go to Real Estate Syndicator Live Facebook group.
Have you ever denied somebody entering that? Because I clicked on that today.
Yeah, I mean, primarily because they're not syndicators. They're just like looking like if like I have a questionnaire, they self-select because I ask them, are you syndicating or do you plan to syndicate? And then they're silent. So I'm like, yeah, you're out.
Because I saw you had to like join because I went to go and read it. I was looking for the link for the thing today, and I was like, oh, I've got to join this. I'm not joining this.
Join it, yeah.
AJ, what do you got for us? Anything to plug?
Yeah, I'm gonna plug the newsletter we got here. So everybody, go check it out. Sign up. Come on, it's awesome.
DREdaily.com.
DREdaily.com.
Get her done.
Get her done.
What about this look? What do you think of this look?
I like it. That's the Urkel look.
There you go. Daddy's home.
Yay. What do you got for us?
I have a question for you, Kyle. What is that logo on your shirt? That's kind of cool.
Conference Connect, baby. That's from our one Bigger Pockets. I was a salesman. I had to learn how to be a salesman for Bigger Pockets, so I had to wear the T-shirt.
What's Conference Connect?
Conference Connect is a website that links speakers, conference organizers, and attendees all to find the best conferences to attend, find the best speakers, improves diversity at these conferences. It's great. You should go check it out.
Is it ESG policy?
ESG. I don't think ESG is going to exist starting in 2025. By the way.
Okay, I'm gonna plug. We've got an awesome multifamily mentoring group. We just changed our pricing policy. You can now sign up month to month, and so check it out for a month. We'll gain we'll earn your trust, and you'll want to join forever. Apartmentaddicts.com. So check out apartmentaddicts.com.
And I'm going to plug my wife as per usual. Go check her out. Badash Investor at Badash Investor on Instagram, YouTube. She's much better looking at Jay and smarter too. So she's a better follow. Go check her out. That's all I got, guys. I've been done my drink. I think I finished my drink at the jobs. I get a little fired up at the jobs. And so, Jay, just keep that in mind. Whenever you bring up those jobs reports, I'm going to get fired up, but, good episode, guys. I liked it.
Get fired up because you killed it and you absolutely called it for like 3 months straight. And then they did the revisions. You right exactly as you said.
I feel like what is he shouting into the wind? Like I feel like I'm still at that point where people just like they don't listen. But anyway, yeah, let's keep this going. A couple good episodes in a row. We'll keep going next week. We're all together, right? Is that
tariffs?
You want to do
immigration? Immigration? Fed policy?
Cool.
Immigration. Let's do a few of the policies. Outline tariffs,
we'll
immigration, things like that.
Do it.
I think. Yep.
All right, sounds good. Well, everybody, hopefully they tune in. For you guys, I will see you next Tuesday.
See you guys
Later.
Late.